Hi, student. I'm going to introduce the chapter 15. So, chapter 15 is the general journal, which is the book of primes to use to record the transaction which is not recorded in others. Book of files, such as the sales journal, sales return journal, um, purchases journal, purchases return journal. All these four is not recorded in your general journal. So, means that in short, except the credit sales, credit purchases, uh, all are put into the general journal. So to have a quick recap, in our accounting cycle, we have a journal, and then for daily records for all the transactions related to the business activity. And later, I move to the ledger, which is the accounts to show double entry, debit, credit for every month. So once I reach to the 12 months total figures, then I move to the financial reporting, income statement, and SOFP. All right, so this part is actually fall under the bookkeeping. It's not accounting yet. So it's not the ledger yet. So this is bookkeeping. So bookkeeping is to record the daily record, transaction, and all evidence proof attached, and then I keep it as a copy. Okay. So now, what is the general journal's roles to play as a accounting record for the daily transactions? So now, except for the credit sales, credit purchases, everything I will dump into general journal, right? Just like I mentioned. So now we go to they are going to record when there is, wait, I got it here. When there is opening entry. So what is an opening entry? Such as when you purchase your asset and liability when you just started your business. So when you just started your business, you have the opening, asset, and liability. So all these things I will put into the general journal, and then to show the asset accordingly as debit is increased, credit is decreased for asset. And then if there is liability, then I put it in the credit plus, debit minus. So at the end of the day, there will be balance, and the missing amount will be capital's amount. All right. And then secondly, they will record about um, if there is a purchase and sales of the asset. All right. So purchase and sales of the asset, if the company buy or sell the non-current asset. Non-current assets, which is the building, tables, equipments, machine, and all this that you are keeping, not for resale purpose, but to help the company or the business to generate more profit. All right. So this is to keep it for long term and not easily to turn into cash money. So how to record? I just record accordingly. Assets increase will be debit side, and then office supply credit. So purchase the fixture on credit. This is the company names that you owe money to office supplier because you purchase fixture, you haven't paid them yet. And when there is a sales of the motor vehicle, we cannot use sales. Otherwise, you will confuse with your income sales. This is disposal. All right. So disposal of the motor vehicle and your motor vehicle account will reduce and put into the disposal account. And this journal actually is just a guideline for you to transfer into your ledger later. They will teach you, they will give you a guidance like where should I debit in my fixture account later in ledger record? Where should I record my motor vehicle when I sell it? I credit my motor vehicle in my ledger later. So all of this, and at the end of the day, if they say year-end transfer, you will transfer to the income statement account. All right. And except this, and there are also record some of the non-regular transaction, which is the irrecoverable debts, depreciation. So this kind of transaction is not always happens in your business activity. Not every day happens. Then you have to put into the general journal as well. I will talk into details when during our class. And beside that, they also the general journal also act as a place to adjust if there is any errors. So which is this 6th error that we have learned in the chapter 3, the trial balance error. So when your trial balance cannot be balanced or cannot uh, agree for both debit and credit amount, then at this point of at this situation, then you will need to find out either is an error of commission, error of complete reversal, omission or original entry, or the error of principal, and so on. So once you find out, then you have to adjust back to the correct entry. So in this situation, who will going to help you for the double entry debit credit guidance, which is you recorded in your journal. This is the layout of journal. So actually this is in the middle. So your date, your details, your adjustment from here. All right. Then after that, what if even though what if I can't adjust the account, such as the error, more than one error? This one. Example, two or more error you can't cancel or undercast, overcast, can't cancel out by themselves only, then you may need a suspend account to help you temporarily the, fit in the double entry. All right. So which is here. Okay, in this topic, in this topic we will, I think there's error. They will teach you how to. There are some errors occur that result in the total trial balance does not agree, which is not balancing. If error is not found immediately, the balance to balance the trial balance, then you can use the suspend account to help you. Why do I need to make it balanced? Because I need to prepare my financial statement. If I did not prepare the financial statement on time, I can't submit my tax on time, and I cannot show to my shareholder on time. So all these things, you must balance it first if there is error happens. But this error happens, the suspend account just temporarily until it's both sides also balancing. If they still have carry down for balance CD, that mean the error is not fully solved yet, fully adjusted yet. So that haven't found yet. So a suspend account is temporary account open to make totals of trial balance agree. So the business could prepare their financial statement. And if all the errors affecting the balancing of the trial balance discover and corrected, then the suspend account automatically close. So means that both sides will be balanced without balance CD. All right. So if there's still balancing and remain, so means they indicate that there's still error in your accounting record, but you have to move on and continue your financial statement because there is deadline to show your income statement and SOP for, such as the government sector, the LHDN, you have to submit your tax. You cannot be late. So, but you found there's some error entry for your double entry in ledger account, or maybe your omission means that you totally ignore, you forgot to put into the account, but this time is rushing for the submission. So you need suspend account temporarily help you to balance it. All right. If your trial balance cannot balance, you will never able to prepare your income statement and SOP, because your mistake will carry down to your income statement, result inaccurate profit for the year, and transfer to your SOP. That time it cannot be balanced with total asset equals to the total capital and liability. Okay, thank you so much. I will talk in details in the class. Please look into your slide and your worksheet.